My name is Michael Guyad, publisher of the Lead Lag Report. Joining me for the hour is Rosanna Prestia, whom a lot of you have seen on Twitter, but we'll do a little bit of deep dive here, Rosanna, on your background. So introduce yourself. Who are you? How'd you get involved and interested in markets? What have you done across your career? And how'd you get interested, especially with your kids, when it comes to chess?
Thank you so much for having me, Michael. You do an amazing job, and we are also grateful for all the knowledge you share with your Lead Lag Report. Seeking Alpha is where I first found you. Thought you were amazing, loved your articles, your spaces, your YouTube, and more. You do a fantastic job. Thank you. And thank you for having me. Thank you to all the listeners. Okay, let me begin. I'm an investor, serial entrepreneur. I enjoy repeatedly turning creative ideas into businesses. I've been doing this for over 25 years, since college, where I studied in a 5-year master's bachelor's program in decision information sciences with a minor in classics, ancient Greek philosophy. I later earned an MBA. I've never had a boss. I met my husband during that time, who is also my partner with almost everything I do in businesses and in life. We decided you only live once, and we wanted to live many lives and try many different things. Plus, freedom is key. Being that he is a lawyer, legal background and financial services, he turned me on to trading and investing equities back then, back in the .com period. And it clicked. I loved it. I loved trading. I loved investing. And it's continued throughout. So our first official business was actually an e-commerce computer resale business in the late 90s. And it taught us a lot of valuable lessons of the importance of knowing your market. Apparently, people were not ready to buy refurbished computers online just yet. It was a great idea. We had a great supply chain set up, but we improperly assessed our market. And it didn't work out, but we learned a lot, and that's key. Simultaneously, we did real estate investing and development, which has continued throughout my career as well. And now that worked. We built wealth and equity over time, had cash flows, and we depreciated the properties while collecting rent. That helps offset the taxes on the income. It's about what you keep, right? Well, then I started and ran few women's only health clubs. I did that in South Florida. Learned a lot about the no B-backs. And let me tell you, those were tough sales in South Florida. And I was in my, I think, mid-20s, early 20s at the time. I also got heavily into nutrition and personal training, aromatherapy, health, wellness, Pilates, yoga, and more. Then 9/11 happened, and the anthrax scare actually occurred right around the corner from our health club. It was tough. They were tough times, but we learned to adapt, to survive. We sold more supplements than membership, and we did great. So it was about being creative, adapting to the changing times. Then we sold those businesses and moved on to new exciting opportunities. We did independent franchise and business consulting. So we traveled for about 2 years around the country to all the states. We did business site location analysis, lease negotiations, business startup consulting and development, financial analysis and projections, and more. And I love all that. I'm a math person, so that was fun. And I love investments, so it was very exciting, and we traveled. Then we decided to settle down. I founded and brokered a commercial real estate firm in downtown Seattle, became a member of SEBA. I brokered commercial properties, including industrial, apartments, warehouses, mixed use, office, retail. I did leases, business valuations and sales, everything, basically everything. I did it all. Even single family homes for some of my clients. I never turned anything down because I looked at everything as an opportunity to learn more. I maintained the growth mindset, and I did very well. I made 6 figures in commissions my first year after relocating to Seattle. These were challenges. There were challenges. There's always challenges, and anyone who tells you otherwise is incorrect. So I had challenges as being one of the few females in a very male-dominated field. This was back in like early 2000 to mid 2000, like 2004, 5, 6. And so it was very challenging. Then 2008 occurred, and we know what happened with financial collapse and housing and everything. But fortunately, back in 2006, we had diversified and invested in our current business, which was in its infancy at the time. So we took it to many higher levels, integrating vertically and horizontally. By 2008, we adapted and innovated, moved to New York, and turned that business from a part-time small niche distribution business into a full-scale international manufacturing, warehousing, and distribution business, fully internet-based e-commerce. I'm now CEO of that business. I've been CFO for quite a long time, and I moved over into CEO position. I'm also CIO of a private equity investment holding company that had integrated from our commercial real estate firm. Investments are my specialty. As you can see, I've been an investor focused on equities, real estate, and businesses. We're also angel investors. We invest in early stage businesses that have demonstrated significant market opportunity and a clear path to profitability, like we did with our current business back in 2006. I'm focused on long-term investing and generating passive income. That is key. Also an options trader. I love math, so I love options trading. And I'm a chess mom, getting to the chess. We took that chess journey with our kids many years ago when they were young. I think 8 years old, my oldest, and the youngest was 4 years old. My middle son was 6. They love chess. Being in New York City, we joined the New York City elite chess community, and they now hold the U.S. record for the 3 youngest siblings to achieve expert and higher USCF rating over 2,000. And our oldest became a national master USCF rating over 2,200 at 12 years old. He's also the youngest New York State Blitz champion. He was the official rep at the Pan Americans Chess Championship a few years back. They all competed at the World Cadet Youth Championship in Brazil. And our youngest is also a candidate master, 2-time national champion, bronze medalist at Pan American. And he lost to the current world's youngest GM, Abhimanyu Mishra, who's actually a very dear friend. We've traveled together for chess many times over the years. So he's a good friend, and he's the world's youngest GM, and he's an amazing kid, amazing family. So our kids play grandmasters when they go to the Opens, international masters. It's great experience. I always tell them, life lessons. Take your losses now, learn from them. We also know Hans. I know this whole thing with the chess news. We know Hans very well, on and off the board. Our kids have played him many times, and he's an excellent player. We've also met Magnus, Caruana, Kasparov, and so much more, but I'll stop there. And in between all this, I'm a marathoner, triathlete, not as much lately. I need to get back into it. Also a cancer survivor. The overriding lesson here is maintain a positive growth mindset. Anything's possible. We create our lives. Challenges, mistakes, failures, or lessons. Success is about picking yourself after falling down. And that's what being a successful entrepreneur has been to me. So never give up. That's what I live by.
I'd also add that it sounds to me like you embody the idea of if you want something done, give it to a busy person.
I think so. The more I put on my plate, it's like the more I can get done. And it's pretty amazing. You just got to be very regimented and properly scheduled, and things actually fall into place properly. It works out well. So yeah, but chess has taken a back seat since COVID. So we've got that off our plate for now. They're going to start up soon again, but they've taken a little hiatus, and that's helped a lot with working on other businesses.
All right, so I want to go to that first venture in the late 90s, the e-commerce, which obviously was a phenomenal idea, and you can argue ahead of its time given the internet's evolution back then. But you emphasize the idea a lot of learning from failure. And I'm curious, as you look back at that time, Rosanna, if you think that it's just a situation where maybe had you waited a few years to launch that business, it would have been a very different outcome. Because I often go back to this point that you can control your effort. You can't necessarily control your outcome depending upon the environment that you're operating in. And oftentimes what leads to success is also just the right timing for the macro environment. But how do you think about the marrying of your desire to start a business and when you launch it in a particular cycle?
Excellent question. Basically, I do believe timing is almost everything. I don't speak in absolutes, so I always say almost everything. Had we launched that business maybe 5 years later, it probably would have been a great success. We had a great supply chain with HP refurbished. We had a great supplier of that. We had the best stationery. We had the best web. We had a great website and everything. People just weren't ready at that time. So we misassessed the market. We were young, we were naive, and we learned through that I like to work from almost the bottoms up. Know your market, know your audience, and work backwards from that. Create your products or services for your audience, for your market, instead of working from the top down saying, oh, I have a great idea, let me market this. And it's like, well, I don't, let's see, the market's not really there yet. So timing was very important. We were way too early in that venture. And that taught us about studying our market first before creating a business and the marketing for that audience.
I've always been of the mindset, I'm a serial entrepreneur myself. I'm never quite happy or comfortable with what I have, right? So is there, I'm curious about this sort of idea that if you have it kind of in your bones, right, it's part of who you are, this idea of wanting to constantly build, that necessarily means you have to be unsatisfied, right, with your current situation. Because at the end of the day, I'd argue that for somebody to be ambitious, there has to be a degree of uncomfortableness. Again, going back to that point that you want something to change, right? So, and that means you probably don't want to retire because you get itchy. You want to do something, right? So, talk about just happiness and the feeling of comfort when you've made it, and how do you balance that? Because you can be a successful entrepreneur from here to tomorrow, but at some point you got to actually enjoy it and stop, presumably.
Agreed. I always speak about gratefulness and staying hungry coexisting, and it can coexist. Forever grateful with my family, my husband, my kids, my home, my life, and real life. And that's key. I'm all about real life, and I'm very pleased with my real life. And I've only been on Twitter now, I think the past year, but really focused this past 6 months. So I'm very grateful in my real life. And that was sort of the impetus to come to Twitter. I was like, let me explore new possibilities. I guess I'm a little older than people, so I'm not as much into social media. And this is a new thing for me, a new platform. And I was like, let me see what kind of experiences are available to me, the connections, the people I can meet. And I've met so many amazing people. And I'm getting ideas for launching another business, surprise, surprise. But yeah, it's that desire. It's just that it's not that I'm not satisfied. It's that I'm just excited. I have these ideas and I feel I have to bring them forward. I've almost finished writing my first book, and it's so hard for me to finish it. I don't know. And I'm just like, I need to finish that. And I already have ideas for 2 more, but I'm like, I need to put those aside until I finish my first one. But it's just having these ideas and bringing them forward to people and sharing. It's like, what's the point of having these great ideas if I don't communicate and share them with others? If I can make the world a better place, if I can, like the products we have in our business, our equipment, we'll get into all that, our business to business manufacturing business it's actually the most energy efficient equipment in our industry. So we're doing better for the environment. We're helping our business owners that we're selling to. So I'm doing a good thing. I brought forward a better product than the competitors. So it makes me feel good. So if I have these ideas to make things better, I want to do it. And I feel I have so many more ideas to just continue doing good. And that's ultimately, at the end of the day, it's about doing good and doing things right. And I just feel inspired. Maybe someday it'll stop, but for now, I'm just excited to just keep going.
So then that I think naturally lends itself to the question of, are you excited about the economy from the standpoint of somebody who's CEO of a manufacturing e-commerce company? So let's get into that a little bit. First of all, explain what exactly the firm does, right? And what are some of the insights that you're experiencing and seeing that may be counter or not counter to the popular narrative around the current state of the economy?
Perfect. I'm happy to share that from the forefront. Well, I'll just tell you, our business is a thermal engineering international business-to-business manufacturing company. We supply thermal engineering equipment, rather large size equipment, to all industries that utilize heating of materials. I sell to, and I don't have non-disclosure agreements, I sell to government agencies, Canadian Defense, I sell to NASA, I sell to Lockheed Martin. I can say those because there's no non-disclosure there. And then we also sell to startups. So we sell to all different levels. Consumer discretionary equipment. It's used for, we do industrials, and I'll get more into that in a little bit. I see this as opportunistic times. I'm always a very positive person. These are difficult times, and there are a lot of difficult decisions for business owners, for investors, for people in real life. But these are all also present opportunities, and they're opportunities for businesses and investors. So the backdrop of the economy, from my view, is that we're in a stagflationary nominal growth environment, potentially could be leading to stagflation within tightening liquidity. We have monetary cost push inflations. Earnings are under pressure, whether we see this pressure in Q3 or maybe delayed into Q4. We don't know. We can't predict, but we do know margins are compressed. There's a potential upcoming employment issues as well. There's data lag. And we have seen a surge in job applicants in our local New York metro area. And productivity's down, and there's less output per dollar. Money was infused into personal incomes in the economy without production and labor. So right there, you're going to have issues. It's going to take time to work through. There's more capital required to produce each output. There's been a change in the worker as well. We're in a different world. When companies reinvest their products, the real output produced for every nominal dollar invested just keeps decreasing. There's a rise in the cost of capital, production, and labor. And it does appear that revenues are being held up more by increased prices, inflation. So inflation works both ways. It's not just in the cost of goods sold or operating expenses. It's also in the revenues. And so, as I said, cost of goods sold and operating expenses are also much higher. So margins are compressed. I call this a dilution of value. We're getting less output for every input. So even our cost of goods sold are still rising. And that's what we're seeing on the forefront. I just received a letter 2 weeks ago of another 10% increase from a vendor. It's a vendor for components, not raw material. And I wonder, is this entrenchment or is it for real? Are they capitalizing on the anchoring of high inflation being accepted? So those are the questions that I ask myself. So there's an increase in raw materials as well. Lumber, I read that. I loved reading your report this past week about lumber, and absolutely, we've seen a rise in that. We ship internationally and domestically, and we have large-sized equipment. So we use lumber to create pallets and crates for our equipment. And we've seen a huge increase in lumber product prices. And the costs just keep going up. So that's definitely another cost driver for us in the shipping and logistics part. Real demand is coming down. So there's a less need for output and workers. So I always wonder, is there potential future employment challenges, which is why I think, could we go into stagflation? There's data lag. It's very regional. So in New York metro area, we have post-COVID backlash and inflationary pressures. Many small businesses did close, and some laid off workers, to streamline, reduce costs, because cost reduction is very important in these times. So we've seen an influx of workers in our industry, and quite a few overqualified have applied for work. And we are always remaining looking at new applicants for our business. So we've noticed that. It was very difficult to remain in business here in New York. It was the epicenter of COVID. So remaining as an essential business was very difficult. And even when they were able to open up again, many businesses could not recover, unfortunately. So that's the issue that we've seen. And real incomes and spending are weaker. And we've noticed that. We've seen this now since the end of last year, beginning of Q1. Business sales overall are weaker. We supply the businesses. So we've noticed that they've reduced significantly in their CapEx expenditures. And that is to produce products and produce goods and services. Some of them are used for services as well. And we've noticed a huge decrease 9 months ago. So we saw it before the data even reflected that. So, and the big challenge I like to talk about is inventories. For businesses that have inventories, there's a potential for excess production finding its way into inventory build. And without sales growth, it's unsustainable. So it's a balance between maintaining higher inventories to avoid delays for order completion, because there's still supply issues and delays. That's still present. There's lead time growth still occurring. And so we want to have that balance to keep a higher inventory to avoid delays, and also can receive bulk discounts. And you could actually view inventory as an investment for the future, because in case prices keep increasing, you could at least purchase it at a lower price. Then at the same time, we do want to remain liquid and keep our accounts payable down. Also, you want to minimize the risk of those inventories building and then having to sell them at a lower price. Even with FIFO, first in, first out, that can still occur. Of course, there's seasonality, fiscal year, budget spending, but the takeaway here is there's uncertainty about the future. No one wants to keep too much inventory on their hands anymore, it seems. And I just received this email from a vendor this week. Due to current market volatility, material pricing and lead times will be reviewed and possibly adjusted when required. Thank you for your patience and understanding. I mean, these notices just keep coming. And so these issues are still present. So as a CEO of a manufacturing business, I can say we're not out of the woods yet. We still have these issues, and we do have some pricing still increasing, and there's challenges. And our concern, as I mentioned before, is lower demand with rising inventory levels. So it is a balance.
Talk about, from the standpoint of running a company, how important confidence is in the cost of capital, right? So part of my thesis the last several weeks, when I keep saying the end of the world is the bull case, is that if you keep on having this heightened volatility in interest rates, at some point, CEOs of companies say, forget about trying to plan for the future if we don't know what the discount rate is going to be tomorrow. And if everybody does that at once, that creates an immediate stoppage of economic activity, because nobody knows what to do, because there's no confidence, right, in the cost of capital being somewhat around the level it is today from a longer term perspective. How do you view, again, not from an investment perspective, from a business CEO perspective, how do you view the volatility in interest rates? Is it causing you to rethink future plans? Is it causing a lot of nervousness about taking on big new projects or taking on even more inventory than you normally would? Talk through that for a bit.
Well, we saw this sort of coming, I could say, at the end of last year. And so what we started doing in foresight, because we lived through 2008 with this business, and we actually grew significantly through that time, through adapting and innovating. And that was the key, and we want to do now. We did reduce our debt significantly. We never really run too much debt. We try to keep very flexible, streamlined books and records. We don't usually make too many CapEx expenditures. We are looking right now to vertically integrate and add some components in the supply chain, as well as in the fulfillment, delivery, logistics part of our supply chain. But we are just continuing what we're doing. And our marketing actually we've reduced our ad budgets, that for sure. And what we've noticed is that our customers know who we are. We have a lot of referral business, and we've modified that. So we're cutting back on expenses. And we started doing this the end of last year, beginning of Q1. So anything we can cut back, we have. We've cut superfluous expenses, discretionary income, discretionary expenses. That was the first thing to go. And we saw that, and we just started cutting. So cost reduction has been number one. Reducing marketing, we've seen how it really hasn't negatively affected our sales. We were able to streamline a little bit in our marketing. But the key is inventory, we keep at, I'd say, a little less than we were, but we're still maintaining that inventory because we see it as an investment. And it has been so far, because our cost of goods sold has been increasing. So the items that we bought in bulk actually in this late spring has been sort of an investment because these parts are still going up. Too bad I didn't buy any more lumber. I should have bought more of that. But, so it's a balance between maintaining those costs down and still being able to expand and grow. Now, we are looking to possibly acquire horizontally a business that is a competitor that will help differentiate our market. We're unsure if we're going to go that route. We may just bring it in-house and create a product that's differentiated on our own organically. So these are just opportunistic times. And the ones that can remain adaptable, innovative, and have the financial means to expand accordingly, but in a timely manner, not quickly. This is patience. It takes time. This is a long process. In my opinion, I don't think we're going to be out of this anytime soon. Could be wrong. I hope I'm wrong. It looks like it's going to be a lengthy process. So we're pacing ourselves accordingly. And we have diversified into other industries. And that's very important. We've seen a change in the sectors that are purchasing their equipment, and the type of customer that we're having has changed as well. So I like to just mention those industries, which are actually in line with the manufacturing reports that we see from PMI ISM. Now, we know manufacturing is down, it's contracting, and there's a slowdown. The new orders, I think, stayed in line this past month. It's basically a forward indicator for earnings. Now, we've seen the industries that are purchasing from us the past, I'd say, 8 months, since the beginning of the year, I'll just say since the beginning of Q1, has been industrials, aerospace, machinery, transportation equipment. Those have been big. Those are probably comprising about 70% of our customers right now, the businesses that are purchasing from us. Also, huge increase in consumer staples. We always have food companies that purchase our equipment, chocolate and candy, but there's been a surge in that as well. Food coatings, beverages, and chemicals. A lot of medical companies, they don't stop purchasing. I mean, we all need medical services. So a lot of orthotics, prosthetics as well. There's been overall less consumer discretionary businesses that produce those items. Less of them have been purchasing. Huge increase in turbine engine companies, metal molding and casting. There is demand for our equipment. It's just the industries have just changed a bit. So what did I say about marketing to our customer? Well, that's what we're doing. We're actually we've been in the past few months restructuring and differentiating our products. Our equipment can work for all these industries. So we're slightly changing our marketing, changing little small things about our equipment that can be adapted to these different industries that actually have sustained growth, and they're the ones that are purchasing. Additive manufacturing for industrial production is big as well. Lithium metal anodes, they use wax coating for that. So they buy our equipment. And cosmetics, I got to tell you, beauty sells all the time. We have quite a few several publicly traded companies in this space that have been purchasing our equipment. So we're still seeing sales in these industries, but it's the smaller businesses that can be more sensitive to the rise in cost of capital for expansion. And they also need cash flow, to maintain their margins. I mean, it's really tough. It's harder for them with the higher cost of production and labor. So like I said before, we've seen larger companies, publicly traded governments, and Fortune 500s being the majority of our customers. And, they're less sensitive to the rise in cost of debt and capital and production and so forth. So the spending patterns have changed for the consumer. So it trickles up to us because we sell to the business that sells to the consumer. So it comes back to us. We noticed there were more goods during COVID. Now it's more services. So, and also a big difference in our foreign orders. We usually sell about 30% to foreign countries. We sell to Australia, all over the world. And with the strong dollar, let me tell you, it's true. What Microsoft said about Forex is true. Our foreign sales have gone from about 30%. It dropped to about 10%. Now, I just did a report 2 weeks ago. About 5% of our sales are foreign. That is foreign to me because we're always about 30% with foreign or international orders. And during 2008, in contrast, our foreign orders rose to about 50%. So it's very sensitive to all these issues going on. And I just want to say, during COVID, we saw a surge in equipment sales to startups, smaller businesses, discretionary industries, a lot of good producing companies. And the industries were candles, soaps, consumables, and CBDs. So the importance is to remain adaptable to the changing times. I mean, I've noticed a decrease in these expenses and discretionary expenses and people purchasing products. And so I would say that, these are tough times and there is a slowed growth going on. And we have tightening liquidity. So there's going to be, in my opinion, overall less spending. I do think that at different scales, there's still spending going on. The affluent at that level are still making purchases. And I've seen that in my local area here in New York. However, unfortunately, inflation affects, others much more. So if they are purchasing those goods, they're probably going to be cutting back on the apparels, on those goods that are not staples. So I think there's going to be a slowdown of that as well. And I think we've seen that.
But I think more broadly also, it's sort of this you keep on hearing this point about deglobalization, reshoring, friendshoring. I mean, I find it hard to believe that any of that can happen under a very elevated cost of capital environment, let alone a very volatile environment.
Yes, absolutely. We're in a global world, and these are challenging times for everyone. And I think that, that's something we have to always keep in mind when making it, more purchases and so forth. So yeah, we're absolutely.
But let's talk about that now from an investment perspective, because I always go back to this point that every investor at the end of the day has to really investing is really at the core about really just one question, right? Is current price overreacting or underreacting? Right? At the core, any investment decision is ultimately about is current price an overreaction to all available information or an underreaction to all available information. So we talk about it from the CEO perspective. Talk about it now from an investor perspective as far as how you're looking at the stock market and if you consider anything as it relates to sentiment as far as your own, whether it's options trading or equity position.
Perfect. Thank you. Well, risk management is key. That's number one. Reduce position sizes. I like to scale in and out of positions, and time frame matters to me. I tend to be more of a long-term investor. I like to remain liquid to seize opportunities. Cash is king, and it's really an undervalued position, in my opinion. I've just noticed that the real return on most assets has been negative, plus inflation. So cash, therefore, only has inflation working against it. These are opportunistic times, like I said, for businesses and for investors. Cash flows are of the utmost importance, especially in this environment of rising costs of debt and capital within tightening liquidity. So I'm just going to briefly talk about investing in real estate. I focus on rents and cash on cash return, not just cap rates. Equities, I focus on free cash flow yield, and not just PE. And businesses, I focus on profit margins and the bottom line, the net profit, not just gross revenues. It's about what you keep and generating growing inflows. I'm also a contrarian, so I always look for fundamentally sound opportunities that could be out of favor right now. And I do see some, I'm fundamentally based, as I've continually said, and, fundamentals do matter, and we can potentially spot these emerging leaders. So what I look for, I base it on multiple perspectives. As a business person, I sort of have that perspective, and as an investor as well. To me, I focus on current financials of a company, and then most importantly, future growth. However, it's very difficult to estimate that. We don't know. It's very uncertain. We can only work with what we have available to us. So I look at how they're aligning themselves. Are they resilient? Look at their adaptability, their innovation. So, cost reduction is number one. So which companies are maintaining or increasing their margins? Are they beating and growing their earnings growth per share? free cash flow yield, margin, the free cash flow margin, free cash flow over revenues, free cash flow per share. Cash is especially important with the higher cost of debt. And I keep saying that because it's very important. Are they raising their guidance? And what are they projecting for the future? So those are very important to me. And I mean, I do have a company, I'll just name it as an example. This is not a buy endorsement in any way, but like SMCI, I'll just say that company because they just raised their guidance before, they just raised their earning expectations before earnings. And they went up this past week. I've been talking about them on Spaces for so many months. They did the same thing last quarter. They raised their Q4 earnings expectations before their earnings. Then at earnings, they beat, and then they raised guidance again, while others are doing the opposite. So to me, that's an example of what I look for in a company during these times and these contractionary times. How are they doing? Are they increasing? Are they growing? And this company is an example of that. So that's an example. And I also look at a company's strategic planning and restructuring. And so are they making sizable, smart acquisitions to inorganically grow their market share or differentiate their offerings? What are their strategic plans? So that's also important as well. So I look at the planning and, how they're differentiating their services and products. And I also look at the fundamentals. So those go hand in hand. Well, I guess you could either say whether I'm more bullish or less bearish. I guess those are very similar. I guess I prefer to say less bearish. So like biotechs, I think that healthcare, biotechs, and there are quite a few, and I've actually been long quite a few at healthcare. That CCRN has been great. I wonder if it's one day it's going to just fall. Who knows in this market? Medical. I think all these like the defensive industries, these are all necessary backbone of what we need as people. So I've noticed that with our business, those have been strong. They've been consistent. I haven't seen a reduction. I've actually seen an increase in selling to all prosthetics, orthotics, all levels of healthcare, hospitals, biotechs too. We actually sell to a few of them. I don't think they're publicly traded, the ones we sell to. And you know what else we sell our equipment for? Oil rigs. They use products that use our equipment for oil rigs. So yes, energy has still been strong. I wonder when it's actually going to come back down. Who knows? I'm not one to predict, but energy as well. So, and then, consumer staples, the Smuckers, that all the foods and GIS. And I've noticed consumer staples have been consistent. So food, beverage, candy, sugar, all those. And a couple of our customers make candy. And that's been excessive. I mean, we've still been selling to those industries. So it's all that. And, commodities. So those seem to be really strong still. I'm noticing that the demand is still constant. People say, there's the demand is reduced in several industries, but in the space of these commodities, raw materials is still, there's supply chain delays, there's a shortage. And we're not in the copper, we don't use that raw material. But yes, I've been hearing about copper. There's still a strong demand and prices are elevated. I do think in a stagflationary environment, which very likely we could be headed that way, commodities tend to do better and tend to be where the value is. And so I am bullish on the commodities, not bullish to the point I'm going to run out today and buy them. But I do see that the demand is still there. And globally, there is a demand. But the Forex, I have to say that having the dollar as high valued compared to other currencies has hurt for our company, the demand. And we've seen a huge reduction in international sales. So I'm speaking from my business. I've seen a huge reduction based on the high dollar. I think that at some point when the supply runs low and they have no other place to turn, then yes, they're going to have to turn to the US. CF is actually a great play. I'm actually long that one. But yeah, I think fertilizers, commodities overall. I like the, more liquid as well, because we are in a tightening liquidity. But, I think that, all the commodities are something we should look at very closely. I can't predict the future. I don't know. But yeah, with the position that we're in, we're the ones that have all these raw material. We have the goods. So when push comes to shove, even with our elevated dollar, and that's going to change. We know how history is. Things change. They don't stay the same.
My view is very simple, right? The seriousness in the bond market is bigger than anybody can possibly imagine if it continues. My whole argument is deceptively simple. If it continues, everything stops. It's a system reset when you have $300 trillion of debt. Okay, so you can't make money under that scenario. So you might as well bet the other way. Now, if you start digging a little bit deeper, aside from sentiment, and you start thinking through the exact scenario you just presented, you can actually make a very bullish argument that there's going to be a lot of demand for U.S. stuff as the Fed still is hiking rates and hopefully stabilizing that volatility, which means that you have, like I went back to what I said before, the only question that matters is current price underreacting or overreacting to the current environment? It could be an overreaction on the downside for a moment in time. Now, I personally, and I want to hear your thoughts on this, Rosanna, also, I personally am of the opinion that we're probably in a prolonged bear market. I don't think this ends until the housing bear market ends. And I've argued many times this is still very early. But it's funny because people seem to forget that in bear markets, you have these 20, 30% runs for a moment in time before lower lows. So let's talk about that now from an options perspective. Okay, because this is about path when you're dealing with options that have expirations. Because you mentioned you're an options trader as well. Is there anything in the options market that's making you think that we might be due for some kind of contrarian run higher, right? So there's a lot of conflicting data when it comes to put-call ratios. You look at retail speculative buying of puts versus calls seems to be off the charts. But I'm just curious to hear your thoughts on when you look at the speculation in the options market. Is there too much confidence one way or another that makes you want to be bullish or bearish?
Excellent question. And I'm actually happy you brought this up because I wanted to talk about this. Yeah, we're in a different world. I mean, we have high debt, high dollar, bear market in the bonds. I mean, there's just a lot of moving parts going on. And then, yeah, I agree with you. We need to see some type of bottoming and reversal in the housing market before we can really declare that we're in a recovery. I mean, home sales are down, but prices are still up year over year. So, there are a lot of issues. It's a slow process in that area. So for me, I'm anticipating more of a range bound, like a sideways, possible leg down. We could have a melt up as well. And I'm remaining flexible. And that's really been working for me, is remaining flexible. I am bullish, as I said, in biotechs. I've been very successful, quite a few of them, and select biotechs, healthcare, and all the ones I mentioned before. I'm also very long in SMCI, and I have been for a while. And there are quite a few others that are demonstrating strength as emerging leaders. Now, how I play options, I'm an options writer, okay? I prefer to sell premium. With a high VIX, we have higher IVs, higher premiums. I love those juicy premiums. And here's what I do. I have long holdings. On most of them, I sell covered calls. In a market like this, they can be very forgiving because we can come back down. We are not in an uptrend. Apparently, we're actually in the opposite. We're in a downtrend. And we are range bound, but we are moving down. So selling calls on a super green day or when the market is giving us a bear market rally seems to be working well for me. I've had to roll out a few, but overall, they've expired worthless. So I'm really happy. It's like collecting rent off of your long-term holdings, off of your shares. So I like doing that. Then I scale into positions slowly. And I always keep my position sizes smaller. Reduce position size is key. So how I like to initiate or add to companies is selling puts, short puts. And I'll give you a quick example for all the listeners. I'll be brief. Let's say you want to buy 100 shares of a company today. Let's say Shop. Shop's pretty popular. I do like it as well for long term. I am very interested in it. And I have sold puts here. So let's say Shop's at $29.75 and you're willing to add 100 shares at this price to scale in. Why not sell puts? You can collect that premium today. Let's say you sell the $25 November. You get a premium. I think it's right now, I think it's a little over $1. You collect that premium. If it comes to your price before that time, you keep your premium and you end up getting put those shares at $25 minus your premium. So your cost basis becomes, I think, like $23.90, something like that. So I've had quite a few go worthless on me, but I've also purchased them back for a significant profit on big green days. So that's what I've been doing in this market. I've been playing almost like a sideways. and I've been very nimble. And I don't day trade. I'm not a day trader. I'm more of a swing. I'm an options trader. I like to sell premium anywhere between 2 to 5, 6 weeks. And I buy, if I buy in spreads because of a higher VIX. And I do have SQQQ. I have some shorting in the market in spreads. But I don't really buy long calls or long puts without some type of spread. I like to reduce my cost basis, reduce my risk. I'm more of an options seller. And I think, I maintain a sort of a bearish to neutral view. So I just go the sideways. And then when I get my opportunities, I take my profits when I can. I try not to stay in too long. I don't get greedy. It's very important. Don't think you have to have them all expire worthless. So, and that's important. That's been working for me, writing options.
I think we'll definitely have to do a follow-up space at some point, Rosanna. Everybody here, please make sure you follow Rosanna Prestia here on Twitter. Again, I will have this as an edited YouTube video and podcast under Lead Lag Live. Rosanna, I really do appreciate your perspective, your knowledge. I think more and more people need to listen to not just other traders and investors, but actual business owners. And I applaud you for the tremendous ambition and success that you've had in your life and your career. I always go back to that point. It's like you've got to fight for what you want and ignore all the noise around you from those that are not in the arena. And you've certainly been in the arena.
I love that quote. Thank you. I post that quote all the time about join me in the arena, because it's the person who has skin in the game and goes in the arena and goes for it and fails, but picks themselves back up and goes for it again. That's a successful person. It's not about winning every time, because you don't, but it's about never giving up.
Very well said. Thank you, everybody, for joining. Thank you, Rosanna. Enjoy the rest of your day. Thank you, everybody.
Thank you so much for having me. You're awesome. Thank you.
Cheers.